Irene, looks like it's 10 o'clock. I'm ready to start if you are.
Okay, welcome to the Blueprint for Profitable Growth by Business Beyond the Shoebox. I'm your host, Irene Cho. This webinar is brought to you in partnership with EWDD, BusinessSource Pico-Union Westlake region operated by PACE Business Development Center. And this webinar will be recorded and you may find it on our website, e-library, after a week or two. Just a little housekeeping before we get started. Please mute yourself during the webinar. If you have a question, please write down the question on the chat box and Lona will answer time to time. Before we get to the topic of the day, I'd like to introduce PACE briefly. PACE was originally formed in 1976, and we are a 501 nonprofit organization. Our PACE Business Development Center provides many counseling services for free and for local business owners. We also provide free webinars and training. You can find it on our website. We also have many of loan. We also provide a loan for small business owners. So you can feel free to visit our website or give us a call. We have upcoming webinars regularly, so you can always check our website and register. Past webinar records, please visit our e-library. Okay, so now let's get to start topic of the day. Please welcome Lona Whitaker.
You ready for me? You ready for me to start? Okay, awesome. So good morning, everyone. This is part of a four-part series, the Blueprint for Profitable Growth. It's, the essential elements and proven fundamentals of that today's entrepreneurs know and use to design businesses that are sustainable and generate predictable results and lasting rewards. I say this to people all the time. Success is not an event, it's a result. You just have to keep showing up. You just have to get efficient, effective, and just figure out how you're going to do this. And so I'm here to help you get some of the fundamentals in place today. All right. So this is profitability by design. I designed my business about 15 years ago. It has served me really, really well. I'm really happy with it. My day doesn't start too early. It doesn't end too late. And I make the kind of money that I'm interested in making. And that's what success is do I have enough time? Do I have enough money? Am I doing what I love to do? So, the bottom line is if you love what you do, you'll never work a day in your life. Now, let's get serious about money. If you're not making money, you have a hobby, not a business. So I have to give you this disclaimer. I'm a small business consultant and I'm a financial strategist and skills trainer. I'm an educator. I'm not an attorney. I'm not a CPA. I'm not a licensed tax professional. I cannot and do not give legal or tax advice. I empower others, entrepreneurs, by sharing with them the things that actually work. Proven techniques, strategies, and skills that you need to know to create businesses that are sustainable. None of us was born knowing this stuff. Really, none of us were, not even I. Okay, it's time that you had the financial and business skills you need for creating profitable, well-run businesses. I have spent a little bit of time here. Savvy entrepreneurs make more money. Bottom line, okay? My purpose is to show you how to transform the way you manage your business so that money management becomes easier and more efficient and takes less time, and that you really get to have a business that you love and one that loves you back. It takes more than ambition and hard work for you to achieve your goals. You need know-how. So for the past 3 decades, I have been curating the very best, most effective strategies, insights, and tools that are essential for making and having money. A lot of the information that you have received over the years doesn't work. It's not accurate. It's outdated. We really want to get you up to speed with the essentials that make you successful. So I think the key point on this particular slide is that I tripled my business income my second year in business by really starting to look at what it was that was working and what wasn't, and letting go of what wasn't working, and really putting all my resources and time into what was working. And I've had 2 clients that went from being local startups to international contenders as a result of that. Their success is my success. Your success is my success. And I'm really happy to share these tips and tools and concepts with you. I'm a Meatloaf fan, have been for years and years and years. Love this particular line that came out of one of his songs. If the thrill is gone, it's time to take it back. If you don't love your business, if it's not loving you back, then find out why. And we're going to cover a little bit about how that gets done in the step-by-step process. But I want you to know that you can always convert your business into doing it differently. You don't feel locked in. Find out what's working, keep doing more of that, and get rid of what's not. This is some insight that I have for you that a lot of people struggle with. They are uncomfortable with the financial side of their business. They don't know how to do it. They don't know the kinds of trainers to reach out to. CPAs are not business trainers. Okay, just want you to know that. Banks are not business trainers. Okay, there are some gurus out there, big name people. They're doing a lot of their work on the personal side. What business owners need to know is different. So I'm here to make sure that you get those financial skills that business owners need. Having the right financial skills will transform your business and your life in ways you cannot yet imagine. There is nothing quite like having financial freedom. I got to tell you, it's absolutely joyful. So welcome. Now, if you don't nail the fundamentals, having the bells and whistles won't help you much. Here's the thing. I use the Tower of Pisa as my image here on this slide deck because I want to remind you that in the beginning, if you're not doing it well and building a strong base for your business, you might not notice it in the beginning. But as your building grows, okay, if you don't have a solid foundation, okay, you will not be able to fix all those problems as your business gets bigger. So let's get those fundamentals in place today. We're going to talk about really briefly, this is only a 1-hour webinar for you. We're going to go over these concepts. You will get the recording. I'll send off the slide decks. Want you to start really integrating these concepts into your business and your life. The laws of profitability, the 3 rules of profitability, the gateway to success, stepping up for profits. This is that step-by-step pieces. And then that number 1 thing you will really want to know. Laws of profitability. Okay. Make more than you spend. That's a no-brainer. Make more than you spend. Okay. The second one is value, value, value. Now, most people know that value number 2 is what it is that you do or you sell. Why people would want to buy that. Value number 3 is what the customer wants. What's in it for them. You want to really speak to these 2 points in a big way. But a lot of business owners miss value number 1. Value number 1 is you. You bring a unique set of skills, passion, and know-how to what it is that you do. You know your craft. Okay? Never forget that you are unique and special and that you have value in the conversation. A lot of business owners think it's only about what they sell and what their customer gets. It's not. It's about what you bring to the table as well. Be action-based. You always want to be taking action. Make your decision, take action. Do it today, do it now. Start with what you have, decide where you want to go, and move forward, okay? Be results driven. Everybody will tell you, measure for results. If you need more customers, measure for getting more customers. If you need more money, measure for more money, making more money. If you need to reduce your expenses, which is not the best way to drive success, by the way, is measure for those kinds of results. Keep your agreements. I'll bet every one of you has had that experience where somebody said they would do something, deliver something, sell you something, and what you got was not what they promised. Don't be that person. Keep your agreements with yourself, with your customers, okay? But keep your agreements. Know your numbers. I cannot stress this enough. Do not ignore taking care of your financial house. You've got to know what's going on. But again, your numbers can be not just your money. They can be the number of sales that you make. It can be the number of customers that you onboard. It can be any of a number of areas when we're talking about numbers. But basically, it's going to be, do you know what your financial numbers are? And are you paying attention to them on a regular basis? Establish goals. Now, you've heard it. I know you know it. Here's the thing. In my first year in business, I didn't have a particular goal. I knew how to do my work. I knew how to attract my audience, but I didn't have a particular, and for me, it was a financial goal. I didn't have that goal. The minute that I established a goal and worked on it on a daily basis to reach that goal, I turned my results around in a big way. Have a plan. No plan survives contact with the enemy, but have a plan. Figure out what you're going to do today, this week, maybe this month. Having a plan for the year is harder to do for most business owners because things change and evolve so fast. But a 90-day plan works absolute miracles. So just, what can you plan for today and effectively work for? Manage your time. Time is finite. Money is not, but time is finite. Manage your time and love what you do. Okay. So those are the 10 laws of profitability. Okay. The 3 rules. So these 3 rules will unlock the financial potential of your business. So pay attention. So there, in 2013, I read this amazing article on a couple of gentlemen who had researched 25,000 profitable companies to discover what they were doing that made them profitable, what was working for them, and how were they making difficult decisions for running their businesses. So they found that they were following these 3 rules. Revenue before cost. Okay, pay attention to making money. Drive profits through price and volume, not through thrift. That's scarcity. Drive it through pricing and volume. Law number 1, make more money than you spend. Rule number 2, better before cheaper. Don't compete on price. That's law number 2. Value, value, value. What is it that you're offering? How are you different? Why do people want to buy from you? Be really desirable. But it's always to do better before cheaper. Unless, of course, you're someone like Walmart or the dollar store, okay? And they're only competing on price, okay? And that's what they compete on. But most business owners should be competing on better because that's what people are buying. That's what the consumer wants. And then there are no other rules. They found there were no other rules. All you have to do is change anything so that you can follow rule number 1 and rule number 2. And there it is in a nutshell. Revenue before cost, better before cheaper. So what's the gateway to success? Well, it is my opinion and my experience that says bookkeeping. It is the foundation for growth, profit, stability, and success. It's how you get to know your numbers. Don't resist doing your bookkeeping. If you won't do it for yourself, okay, you're resisting it, you don't know how, either learn how to do it or hire really good help. However, you're going to need to know some fundamentals because you are the CFO for your company. You're the one making those financial decisions. So do your bookkeeping or learn how it gets done so that it's being done effectively and giving you the information that you need to know so that you can operate your business by the numbers. So here's a little bit of terminology. Bookkeeping tracks the transactional detail of your business money, okay? It needs to be accurate to be useful. Accounting is that big picture view. That's the CFO part. Your transactions will show you what is really happening. You can't run your business from a subjective conversation. I think, I suspect, I feel, okay? No, run your business by knowing. Let's see what your transactions are really telling you. Are you making more money than you're spending? Look at your numbers, okay? Do you need more customers? Do you need more revenue? How would that fix things? So you want to know where your money is coming from and where it's going to so that you can make informed decisions and what steps to take and when to take them. It's not about working harder. It's about knowing what to fix, okay? And if you don't do good bookkeeping, garbage in gives garbage out. So this is the chart of accounts. Now, I'm not going to show you that. That's in our financial presentations, but I want to get you some fundamentals in place, something that every business owner needs to know. On the chart of accounts, there are 6 building blocks that you want to understand what they are and what they mean when you see them. On the balance sheet side, you have assets, liabilities, equity, okay? Equity tends to be the hardest part for business owners. They really don't understand what that is, and we're going to do just a little bit more on that in just a moment. On the profit and loss side, you have income, cost of goods sold, and expenses. And again, we're going to do just a little bit more. We're just going to move into a little more detail here on each of those items. Okay, assets. You know this, something belonging to you. Cash, inventory, furniture, equipment, trucks, computers, things that you own, okay? Liabilities. It's what you owe, okay? Debts, bills, loans, credit cards. The thing is that some of your assets you may own outright and in full. Others, you may have liabilities set against them, for example, a vehicle or a property or something like that. If you've owned a home, you understand that the asset is worth, let's say, $500,000. But if you owe $400,000, we move into what's next? Equity. Equity is the difference between what you own and what you owe. And the balance sheet is regularly ignored by business owners because they don't understand it or they don't think it gives them good information. They're only interested in the profit and loss side. No. You want to know the financial health of your business, and it's going to be assets against liabilities and what is my equity from there. The equity part maybe has the least amount of really useful information for you on a daily or a weekly basis, monthly basis. It's kind of from the year perspective is where that equity conversation can be a little bit more important. And certainly if you're interested in selling your business at some point, okay, equity is going to be that big conversation. But right now, for most of you, assets and liabilities are going to be those big pieces that you want to know off of your financial reports. Most of you understand this particular part of your financial reports, the profit and loss statement, also called an income statement. Okay, this is that part. Am I making more than I'm spending? So income. This is what you get paid for what you do. This is all that it is income. What you get paid for what you do. Money that you put in to your business from your own personal pocket is an equity. It comes out of your equity, your personal equity, and goes into your business. It is not income, okay? You get a refund. That is not income. That goes to expenses. Income is almost exclusively what you get paid for what you do. If you get a refund or you have to give a refund or something like that, then that comes out of the income. And you'll get more skills on that as you go along with your business. Costs of goods sold are those expenses that are directly tied to your income. The IRS doesn't have any particular concern of what you put under expenses or what you put under costs of goods sold. However, I'll give you a distinction. Merchant service fees, when someone uses a debit or a credit card that you pay, are directly tied to that payment. So they're costs of goods sold. If you have an inventory item and you're selling the inventory, then that's a cost of goods sold. However, cost of goods sold can also be direct labor, either employee work or contract labor. It can be under cost of goods sold because having that information there allows you to better do your pricing, okay? Expenses are those things that it costs you to run your business, whether you make money or not. Okay, super easy. Like your computer, your web hosting, your marketing, your utilities, your insurances, all of those things, payroll, all of those are expenses whether you make money or not. And again, the IRS is not real particular. This information is for you as the business owner so that you know where to make the adjustments and exactly where the problem might be existing. Because when you read those reports, things will start showing patterns and they'll make more sense to you. Profit and loss report. So we're going to just cover this a little bit very briefly today. I do more detail on the other financial trainings which we had and which are in the library if you want to look for those. So, we have sales, you have total sales, okay, and you have net profit. Okay, the net profit is the difference between your basically what you've sold, your cost of goods, and what you're going to keep. Okay. For a sole proprietor, particularly, the net profit is a taxable number. This is where your income taxes come from. For corporations, it can be different. You'll get your training and more education from your tax professional so you understand this better, so you can make your planning regarding taxes and whether you're making enough money, okay? Because if you're a sole proprietor, roughly 1/3 of this money could be taxable. And for most, minimally, it'll be 15%. 15% of this money goes away immediately for your taxes. So you want to understand that this number is taxable and in what ways it becomes taxable. So remember, revenue before cost, better before cheaper. And this is where you'll start making those assessments, okay? Am I charging enough? What is it costing me to make that money? Okay, so that's where this all begins here. So then you have your expenses and wages. And so if you're a sole proprietor, wages does not apply to the money that you take out of your business. Okay, that goes out through equity as an owner's draw or a distribution for a shareholder or something like that. Wages only applies to businesses that are set up as being taxed as an S corporation. They're either an LLC taxed as a corporation or an ordinary corporation taxed as an S corporation. So again, this is more advanced training, but this is just a fundamental piece of information so that you kind of go, oh, am I attending to this? Is there something more that I need to know about this? Typically, the wages category is simply for employees, okay? If you're an officer of your company, I encourage you to have an officer's salary line so you can see what you are getting paid. Okay. The gross profit number is the only amount of money that is available for all of your cash needs. Your expenses are not your only source of money that you need. You also have, if you have loans to pay or credit cards to pay or anything like that, those are going to come out of your available cash. So that's kind of that place for you to do some measuring. And again, the financial trainings are a whole separate item, and we do have recordings for those. Oh, I see a question. So, and I see a smart answer. Okay, so David Cho asked, are debt payments an expense? And Nadia said they are liabilities. And you're right. Nadia, I bet you have been to one of my previous financial workshops. Absolutely. Debt payments are not expenses. They do not come off of the profit and loss. If you owe a loan or something like that, it comes out of your cash flow. Thank you for that quick response, Nadia. So let's talk about stepping up for profits. This is that step-by-step place that allowed me to triple my income my second year in business. So here we go. You ready? Step one, Okay, the three keys to success are assess, design, and implement. Assess where you are and where you want to be. And for most people, it's a financial conversation. You could make it as clients. It could be the number of clients or the number of sales that you have, but then you're going to design how you're going to get there. And once you do the design, you're going to implement the design. You're going to take action and you're going to start moving on that. Now, things will change. As soon as you start moving forward, things can change. And this is where you'll go back to assess. Did I get the results I was looking for? No. Then what do? I'm going to design a solution to that, and then I'm going to implement the solution. And you're just going to do it over and over. So here we go. So step number one to the assessment is to determine your financial floor. I encourage you to know not just what your financial floor is for your business, okay, which would basically be your expenses and all the other cash outlays that you need in any given month, okay, but I want you to also assess your personal financial floor. How much money do I need to keep a roof over my head and food on the table and maybe travel a little bit or put my kids through school or plan for that wedding or whatever it is that I want to do? Determine your financial floor. The financial floor is absolutely the bare minimum that you must bring in for your business, for yourself, and to cover your business expenses. And then you can add on to it savings and some other things. I'll cover that a little bit here. So if you're not doing bookkeeping, okay, and I sure hope that all of you are, what you can do is you can go to your bank statements and your credit card statements to determine how much is needed every month. Again, paying attention to annual cash needs such as taxes or insurance. What are those numbers? Again, you're going to do this for your business and you're going to do it for your personal so that you know what that big number is. This is why a lot of the training for individuals doesn't work, because business owners are not just measuring their paycheck, okay, and then managing their personal financial household and debt. They're actually having to do the same thing for their business, okay? If you're an employee, your paycheck may be fairly predictable. However, for a business, maybe your revenue income is not that predictable, at least right now. The goal would be to get it to where you can absolutely predict what your income is going to be and what you need to do in any given week or month to make sure that you're getting that revenue. I do have a little free income calculator that you could grab, and it would give you some steps for you to get some fundamental elements in place. Again, this is not something that you have to do often or is hard, but you do need to do it. And a lot of business owners try to fly by the seat of their pants, and it's just not going to work. Okay, I used my P&L to determine how much I needed every month to support my business. But again, if you don't, then you can grab your bank statements and credit card statements, paying attention to annual expenses, and don't forget any debt pay down or loan repayment per month and per year kind of a thing. Okay. So design. How do we do the design? Well, think about really how you would like to live your life, how much money you need, and where you want to spend your time. So I would really encourage you to design for the future you want, because all futures are created. So do some estimated tax liability, get some emergency savings, get your debt paid down, okay? Interest is just money out of your pocket that just goes away, and you don't need to be doing that. Having a mortgage is considered good debt. Having a truck loan can be good debt because maybe you can't afford the cash flow out right now. Buying a truck and paying it off on time, that's fine, but manage your debt. Credit card debt typically just eats away your cash. That would be the one where you'd want to do the most about keeping that piece paid down. And if you have old debt, get rid of it. Do what you can. Plan for vacations and travel and family fun. And let's not forget to do your retirement contributions. Makes a huge difference in your future. So this is kind of just, again, a little overview of what you're looking for. Calculate your monthly cash needs, personal financial floor, business financial floor. Those are your bare minimums. Add those two numbers together, and now you have a monthly financial floor. This is the absolute minimum amount of money that you need to bring in to cover both of those financial floors. Here's the thing, this can be done. I want you to know that it may feel daunting at first. The thing is once you know that number and start measuring for that number, your whole behaviors will begin to change. Now, for a little advanced work, then just go and create a financial floor for annually and add some annual goals that you would like to see, your go for numbers. Okay. These are just suggestions. Those are not absolutes. Every person has different needs and desires. So you just go in and figure out what it is that you would like to see. And then you go and you create revenue goals. And this is where I found the most effectiveness for what began to change my revenue and what was happening for me. So what you're going to do is you're going to identify your annual revenue needs and desires. You're going to divide by 50. Sometimes I ask this question, why 50? Why not 52? Well, that's the number of weeks in a year. And I say, well, you should kind of plan for some time off. Let's plan at least to begin with 2 weeks off where you don't have to worry about making money. So now I've got my financial goals built around a design that works for me, that I'm going to take off a couple of weeks and I don't have to worry about making money in those weeks. If you have a machine that kind of works for you in the background while you're gone, awesome. But a lot of people don't. A lot of people's businesses don't do very well when they're not paying full-time attention to them. Now you're going to divide it by the number of revenue days per week. So if you're only working 5 days a week or 4 days a week, you're going to figure I need to make so much money each of those days. I used 4 days for mine. So I said I want to have Fridays, Saturday, and Sundays off, or maybe Mondays and the weekends off, whatever. But I said I only want 4 working days. And I divided by the number of revenue hours. And for me, I was doing financial consulting, those kinds of things. And so I was working 4 days a week, and I was working about 6 hours a day. I work a little less now, but the thing is that you can design that. I had a friend who had a business. Basically, all of her revenue had to be earned in 3 days. They did events, so they had to make their money on Friday, Saturday, and Sunday. Okay, that's the only days that she had available to make money. Her business was open on during the week because that's where they arranged for their clients and such, but she only made money in 3 days of every week. Now, I use this information, the revenue hours and the revenue days, to determine my minimum hourly rate because I was working by the hour. I was getting paid by the hour. Determining your revenue based on like selling an inventory with cost of goods, that's a little bit of a different formula. You still want to know what is the minimum amount of money you want to be making for the hours that you're working. And this is really critical if you're going to make money doing what you love. Okay, so this is a real fundamental piece of making some determinations there. Okay, and then I just set daily financial goals. You can have a minimum target, that's your financial floor. Okay, you can have a target, which is, this is really where I would like to see my financial health develop. And then you can have a stretch. Okay, like I'll really go for the stretch. So a triple for me was a stretch. I wasn't sure that I could hit triple, but I based my target, my financial goals based on triple. I said, I'm going to go for that. I'm going to stretch myself. Now, here's a key. Don't double down. If your financial goal is $200 a day and you don't hit it, the next day you don't make it $400. Okay, that'll make you crazy in just a few days. What you do is say, I want to learn how to make $200 a day. What will it take for me to make $200 a day? And every day that I don't make it, I go, what could I have done better? What could have been more effective or more efficient? I'm just going to go back and I'm going to look at it, and I'm going to look at it on a daily basis until I learn how to make the $200 a day. Then, if you want to increase your number, go for it and learn how to create $250 a day or $2,000 a day. Whatever is your desire, you can do that. So you just say, okay, first I'm going to learn how to do 200, and then I'm going to learn how to do more. Okay. So, but don't double down because it'll just make you crazy. So implementation. Okay. So clarity, focus, action. These are the trifecta for getting results. I have worked with lots and lots of business owners who have said, I'm uncertain. I don't know what I'm supposed to do. And I said, well, most business owners actually do know. That can be very subjective. You can say, well, I don't feel like I'm making enough money. Okay, go measure for it. Oh, well, my bookkeeping's not up to date. Fix that. Okay, that's the action, fix that. That's an action piece. Focus on these things. So if you feel like something's amiss with your business, okay, then take a look at it. If you don't have the resources to make sure that that look gives you clarity, then fix that problem. So these are the trifecta for getting results: clarity, focus, action. Okay, and that number one thing, okay? And I've gone through this, looks like I've gone through the slide deck really fast. So we'll go back to anything that you would like. We'll have a little more time for Q&A and would be happy to revisit each of these slides. So this is that one thing that really, really made a difference for me. And if you do this every day, it will change your life. And basically my totem is the frog. Okay, it's eat the frog. And what do I mean by that? I mean that if you're resisting doing something, bookkeeping, invoicing, okay, meeting with clients, setting appointments, making phone calls, whatever it is that you are finding that you are resisting doing that would make a difference for your business, that's a frog. That's a frog. You are resisting something, so eat the frog. It's attributed to Mark Twain. He said, look, he said, if you've got a frog to eat, you might as well do it first thing in the morning so that you can get it over with and go on with your day. And what I have found is that by eating the frog and doing these hard things first, things that I'm resisting first, I feel more accomplished, more empowered, and I actually feel better for the rest of the day, and I actually get more things done. So it will change your life in ways you will not believe. For a mindset, I'd like you to think of frog as a financially relevant opportunity for growth. Anything that's related to your business can be a financial frog. Okay. What needs to be done? My invoices, making sales calls, that can be one. Doing my bookkeeping, that's financially relevant. Anything that is good for your business, okay, can be a frog. And you'll know it's a frog because your part of you is going, I don't want to do it. I just don't want to do it. So, my little sticker there is I ate a frog and I liked it. Okay. So he's not happy about it, but anyway. Okay. So success is not an event, it's a result. Master the 10 laws of profitability. I'm going to tell you, you go back to those laws and you say, I'm not profitable, then look at the laws and see why you're not profitable. They're going to be resting in there. Are you paying attention to your value? Are you measuring your numbers? Are you staying in action? What is it that you might be missing? And it's going to be different for different people. So look to see which 10 law you may be breaking. Okay. Embrace the 3 rules that will unlock your financial potential. Remember, revenue before costs, paying attention to your money, and better before price. Okay. So always do better, that sort of thing. Acquire any of the skills you need so you can know your numbers and use them. Bookkeeping, learning how to read the reports, understanding your tax basis better, getting some help from a CPA, getting help from a financial strategist, getting help from any of the consultants over there at Pace. I mean, this absolutely. Are you missing a skill that's keeping you from achieving your results? Figure those out, get the help you need. Create goals, have a strategy, take action, and do first things first. It will change your life. Financially savvy business owners make more money, are more profitable, and have more fun. You can confidently adapt to change, and things are going to change. Things are going to in your community, okay, in the world, in the country. I have a client whose one store is struggling because they have been doing road work right next to her parking lot for 3 months. It's brutal. So stay focused on what's important to you and create a business that delivers on its promise of financial freedom. Excuses will turn your dreams to dust. I don't want to hear them. I want to hear solutions. Now, traditional business education typically ignores a simple truth. Systems, structures, and skills alone aren't enough to get us across the finish line. Okay? In fact, they account for only 50% of the success equation. I was really surprised when I started learning this. Okay? Our belief systems run everything. What you believe about your business, what you believe about your customers, what you believe about yourself. Business owners must learn how to embrace the positive, empowering beliefs that support making and having money. Okay, so thus I'm going to give you the 11th law of profitability. The possibilities for achieving a life of joy, purpose, and financial success are limitless. Okay, they're limitless. They can be whatever you want them to be. You'll have to do the work. Nobody's going to do it for you. I mean, even if you wanted to win the lottery, you still have to buy the ticket. So the reality is that when you believe that everything has possibility and you just need to find that solution and roll up your sleeves and do the work, you're going to find that you're going to have a joy-filled life with purpose and financial success. So here's the kind of grim news and good news at the same time. According to the Intuit study, they are the makers of the QuickBooks. Over 80% of entrepreneurs manage their business finances on their own. I'm thrilled to hear that. They should be managing it on their own. Okay? They should get training, but they should be managing it on their own. Nobody cares about your future better than you do. Okay? The SBA estimates that 60% of all businesses fail not because owners lack passion or good ideas, but because they lack expertise to effectively manage their resources, their time, and their money. Okay, get the training that you need. Frankly, though, most people don't have 2 years to spend going to a local college to get QuickBooks trainings or to get bookkeeping training or CFO training. We kind of learn it on the job. And these kinds of workshops are ideal for helping you to get quick trainings that'll help you say, oh, I'm missing this piece, or I've got that one nailed, or I could do better here. So just look at where it is that you want, how you want to spend your resources, because that's where most businesses fail, is they fail to effectively manage resources, time, and money. Okay. And then I got to tell you, folks, no plan survives contact with the enemy. Nothing that you plan or aspire to is going to be carved in stone. Okay, it's just not. The world is fluid. Things happen. Things change. You change. What you want changes. Your needs for your family change. So adapt. Go back to assess, design, implement. Typically, you won't do it maybe more than every 90 days because seeing results takes about that long, but at least be doing it every 90 days. And do it no less than annually. Having an annual review of your business results and what you want to change and what you'd like to do better is really, really great. Your bookkeeping is for you to measure your numbers. It is not for your CPA and not for the IRS. Sure, they use it for your tax purposes, but most people see bookkeeping as just something they have to do and it's icky and they don't want to do it. The reality is it's for you to drive your business to get you to where you want to be with your money. So just be kind to yourself. No plan survives contact with the enemy. And the enemy is implementation and what things actually happen and look like. Okay, so I do have a little gift for you. I did drop it into the chat. I think I still have it memorized here. Let me see. I'll drop it in again. There it is. So there's a Entrepreneur's Path to Financial Freedom. It's a little free ebook. This code should work. So it's the ebook 10 should make it, 10. We'll make it free for you. Okay, so feel free to grab that for your own. Again, you are going to get a copy of the recording in a few weeks, and I will be sending over the PowerPoint shortly to Pace so that they can get that to you and get it loaded. And I remind you, when you have a business you love, you'll never work a day in your life. You will still love having your business. So we have a little time for some Q&A. I know this was fairly generic, but it's all fundamental piece. These are all fundamental pieces that are at the core and source of success. Despite what other people tell you, okay, it's really that simple. So what questions do you have for me today? I'm happy to answer them. Okay, wake up. Come on. Something on financials, something unique to your business. What would you like to ask? You can ask anything. Oh, I caught you off guard. Oh, good. Matthew. Okay, I have a nonprofit currently and want to expand into a facility. Okay. You'll have to identify what the issue is. I'm not going to ask you to do that right now, but nonprofits function in a different way, because basically you don't have to be profitable because you're not going to be taxed, but basically you have to make more than you spend in order to have the money to expand into a facility. So that's a planning, and I think there are people at Pace that can help you kind of chart out what those financial needs are. And so you would look at your financial floor for where you're operating now and say, what do you need to add to that? And that will show you what your revenue needs to be in order for you to do that. And then you have to figure out where you would get the revenue. So that's a great question, because it applies to for-profit businesses as well as for nonprofits. Where am I at today? Where do I wish to be? What's it going to cost me to get there? Okay, great question. So you need help with long-term financing. Chances are that that's going to require a business plan. Get some help with that. Reach out to, again, I'm sure, and Irene can answer this, but I'm sure there's people at Pace that can help you go through the process of applying for an SBA loan. And I don't know if they do them for nonprofits. The other place for financing would be...
We don't do nonprofit. Sorry.
Okay, they don't. Okay,
Yeah.
then I would have, if you need long-term financing, which is, again, tricky for nonprofits, I'm going to say you need funding as opposed to financing, which is a different conversation. There are some funds available through foundations. Okay, banks have them, other organizations have them, so you can find it through a foundation. It might be multiple resources that provide the needed funding. And don't forget to look at the IRS funding opportunities, okay, because there is money out there for nonprofits, but in order for you to get a grant from anybody, you have to meet the criteria for which they give the money. So that's going to take some research. So yeah, it's a great conversation. So figure out where you might look for that, and then start thinking of it not in terms of financing, but in funding, which is kind of a different approach and might help you find those resources better. Okay, I'm going to go over here to the chat. Okay, Quentin says, I have an S Corp, P&L shows profit. I want to lessen it to decrease tax liability. Okay, first off, I'm not a tax professional, but so you have to figure out, if you're an S Corp, first of all, you want to be sure that you're paying yourself enough through payroll, because your payroll as an officer is a deduction and you would have some taxes there. I would remind you that if you owe taxes, it means you're making money. This idea that we're not going to have to pay taxes is a fool's errand. Okay, because if you're making money and you're profitable, you're going to pay taxes. The best way is one of the best ways would be to, if you need a vehicle for your business that can be depreciated, and that's a non-cash kind of transaction that your tax professional will help you with every year, and that would reduce your tax liability. So your best resource right now would be to take a look at what you have and talk with a tax professional to see what it is that you could do, whether you contribute to your IRAs or retirements or something like that. A tax professional will give you the best guidance on that, whether it's going to, then so you just look at that. Okay. It's a great question, Quentin. Thank you. Jose, at what stage should businesses invest in reviewed or audited financial statements? Oh, this is a good question. So I understand it depends, but what key considerations should a business owner evaluate before going down this path? We are seeing audited financial statements as required to bid on projects. I would check with your CPA. Chances are, as soon as you have your taxes done, that actually can qualify as an audited financial statement. Audited financial statements are for really, really big corporations, okay? And so I would talk to your tax professional about whether having your taxes done can be considered an audited financial statement. So typically, audited financial statements are the P&L and balance sheets that you pull from your reports from your business, but they're not considered audited until after you've had your taxes done and a professional has gone over them. So I would certainly check with your tax professional to see whether what you already are doing qualifies for that. Okay. All right. Let's see what I have. Oh, thank you. I don't know how to say your name. Zequi. Okay. So thank you. I'm very happy to have been giving you this presentation. Let's see, Matthew. Thank you. Okay. Has a good question. Thank you, Quentin. This is Quentin asks if contributing to life insurance as retirement is retirement a write-off? Okay, so looks like you've blended two questions at the same time. So health insurance for a business owner can be a business expense, okay? And that's it's a depends kind of conversation. Talk with a tax professional about that. Typically, health insurance can be. Life insurance, probably not. It really depends on the purpose of the life insurance, of what it is that would be you'd be using that for. So that's, again, a conversation with your tax professional. As you folks know, tax law changes all the time, can change every year. So keep in touch, find yourself a good tax professional that will guide you, one that understands businesses, likes supporting business owners. They are out there. You want to talk with them, ask if they do a lot of business tax returns. Some CPAs only do personal tax returns. They're not as highly skilled as you would like them to be on the business side. So find someone that works on that. And then regarding the retirement. So retirement contributions have very specific kinds of tax considerations. Again, this is a conversation for a tax professional that can look at your reports and help guide you in making smart decisions and give you the timing for when those decisions need to be made. So for lots of businesses, you're in a sweet spot right now before April 15th for making some additional deductions for retirement and for some other things that may still apply to last year's taxes. I encourage you to always meet with your financial professionals in the fall, September, October, so that you can see if there are any additional adjustments or assets you may need to buy before the end of the year, which is the kind of the cutoff for most businesses, December 31st, to make those decisions beforehand so you can see what strategies you might have for the remainder of the year to reduce taxes. The retirement conversation can be done and is allowed, I believe, after the end of the year. Again, you find out from your tax professional what's right for you. Okay, I can't answer those questions specifically. Anything else? We have just a few minutes. Okay, well, it looks like we are mostly complete. I'm very glad that all of you were here today. And I wish you the very best of luck with your businesses, and be sure to reach out and get the help that you need so that you can live within the 11 laws of profitability. Okay.